4 years ago, people feared Dubai's build it and they will come model had come unstuck for good. Overcome by a sea of debt, the city's towers and fantastical offshore islands would be reclaimed by the desert sands, they claimed. But Dubai is now enjoying a recovery. The Gulf Emirate, which started out as a low-tax trade hub at the turn of the 20th century, has gone back to basics, refocusing on trade, tourism and transportation.
Dubai's underlying economy is one built on trade, travel, logistics, tourism, all these kind of fundamental strengths that Dubai has, and these are all experiencing an upswing for a number of reasons. One is a tentative global recovery, so since 2009 we've seen an upswing in those. The Asia effect, which is basically a rising interest in Asia and particularly China to consolidate their hub operations in Dubai, so we're seeing a lot of Chinese investment in Dubai and a lot of inflow of Chinese workers into Dubai, and that's also helping prop up the economy.
Healthy tourism arrivals have led the turnaround. Gerald Lawless, chief executive of hotel chain Jumeirah, has seen strong demand, especially at beach properties, as tourists flee Arab Spring unrest.
We've seen a huge uptick, particularly towards the latter end of last year and right through 2012. I'm really pleased to see that happening here in Dubai. In fact, in certain cases, we're getting back to where we were in 2007, early 2008.
Farouk Sousa of City says two factors continue to pull the economy back: the city's $100 billion debt burden and a real estate overhang.
There are two major drags on the Dubai economy that still exist. One is the debt burden and the debt overhang, and the other is the real estate overhang.
The real estate sector in some areas is also staging its first sustained recovery since crashing 60% as the global financial crisis struck. But real estate agents say more regulation is needed to help the property sector. Victims of the property bubble remain, shedding an uncomfortable light on the city's legal system. One person to have felt the full brunt of the criminalisation of debt is Safi Qureshi, a real estate executive who has been in jail for 2.5 years for bouncing post-dated cheques, even though he says he had cleared the dues the cheques underwrote. The 43-year-old Briton spoke to the FT from Al Awir jail in Dubai, where he is in the 4th week of a hunger strike, along with 20 others.
There is nothing you can do in Dubai without giving either a post-dated cheque or a secured cheque. You can't take a car loan, open a bank account, you can't take a mortgage. Now, that may have not been true 30, 40 years ago when the bounce cheque law came out, but these days you cannot do anything without giving a security cheque. The interpretation of the prosecution here is that the cheque bounces, that's your crime, you go to jail. The judiciary over here is just not willing to accept that the way Dubai is now doing business is different to the way it was 40 years ago when this law was made.
The Dubai government has declined to comment on their cases, but analysts say vested interests such as banks and landlords lobby against reform to the current system. The threat of debtors' prison presents creditors powerful leverage over their clients.
The Arab Spring has helped Dubai recover from the lows of the financial crisis. The hotels are full, the airport is rammed and trade is up. Restructuring has helped ease the city's $100 billion debt burden, but questions remain over whether the economy can grow fast enough to fill the city's empty towers. There's little the government can do to shape regional geopolitical events or the global economy, but what it can do is introduce new real estate regulation and introduce other laws that will help foster private sector growth. This is Simeon Kerr, Financial Times, Dubai.